But very helpful one, Prableen. Thanks a lot for joining in and explaining to our viewers how they should go forward with achieving their life goals and what's the kind of financial planning that you need to do in your early 30s and 30s to 40s. Thanks a lot, Prableen, for joining in.
Thank you.
Well, with that, it is curtains down on Smart Money. But before that, we're going to tell you our financial tip of the week. Every week, we come out with some financial tools that can help you in your journey. And today, we talk about 5 important things to remember before you invest in index funds, in passive funds. First, you need to find out the expense ratio. Now, expense ratio is the fees that is charged by the investment company to manage the funds of investors. A reasonable expense ratio for an actively managed portfolio is about half to 7.75%. And for passive funds or index funds, the typical ratio is about 0.2%, but it can be as low as 0.02% or less in some cases, and hence the attractiveness towards investing in index funds. The second thing, find out the tracking error. Now, tracking error in simple terms is how much the fund's performance has deviated from those of the index. Ideally, the return of such funds should match those of the underlying index, but due to expenses and cash equivalent, it may be lower. Obviously, the lower the tracking error, the better it is for you. Third, find out the AUM of the fund. Larger the AUM, more stable the scheme is and better to invest in. Now, the AUM of funds are easily available in all fund fact sheets on the AMFI website, on Money Control, Value Research, etc. on the company's website as well. Fourth is taxation. Taxation of index funds, being equity funds, index funds are subject to capital gains tax. On redeeming the units of an index fund, you can earn capital gains which are taxable. It's the capital gains earned by you for a holding period of up to 1 year is short-term capital gains, which is 15%, and capital gains of over 1 year is 10%. And the last and final, most index funds have an ETF option. And for those wanting to buy in demat form or are keen on intraday trading and prices, you can look at investing via the ETF mode. Now, index funds have a higher expense ratio as compared to ETFs, but ETFs also have a transaction cost which is attached both at the time of buying and selling. All the best with your investments. With that, it's a wrap on this edition of Smart Money. Thanks for watching.